All right, traders, this is Abdel from the Trading Authority Ratio Trader. Let's go ahead and take a look at the markets on Sunday evening, April 26th. An interesting market open we've had here. Now, again, the trading session doesn't open until Monday, technically, but these are the futures that we're looking at real quick, and we'll take a quick look at what to expect throughout the week. Now on Friday, those of you who are ratio traders, we got short the S&P right near the end of the day at around 66.50, 866.50, and we use these highs here, the all-time years high as a stop around 72.50, 73.50 on those stops. Okay, markets opened. You see on Friday, actually, what happened was we had a nice sell-off towards the end of the day, and then right as the market was closing, the cash session in the futures doesn't close till 4:15 Eastern, rallied and made this nice little hammer. But again, we stayed in the trade, stops above the highs, obeying the plan. Market opens, and you see we've had a significant gap down. We have only been open for about a couple of hours here, and it looks like the S&P is down about 13 points. So the first target we're looking at is around 46 to 47. You see the absolute low here so far. Let's bring this in real quick. Absolute low here was so far 51.50. So at this point, I'm comfortable bringing my stop to around the break-even point, and then seeing if I can wake up tomorrow or sometime tomorrow and see this at target. So we'll be watching for that very closely. Now, if we dive into the daily charts, let's go into the daily real quick. We'll go to format daily. So on the daily here, let's get rid of the pivots here. Get rid of the pivots, remove that. Okay. All right, so as we take a look at the daily here, you see right here, significant area of resistance here. You see we've rallied right into this zone. Now, actually, let's take a look at the spiders real quick to get a better picture of really what's happened. And I talked about this several times before. You see from this swing high here, this is the swing high that happened in November of last year. You see we came down right down to this area, okay? And then we rallied over the course of basically from November 21st till it looks like what, January 5th. We rallied to the high, and then bam, that was the peak really that happened right towards the end of the year, and then bam. Okay, now one of the things we pointed out in the ratio room, and we'd been projecting this for a really long time, is where was the market headed if we were to break the lows. And what we did was we took our fib tool, we went from the swing high there to that low right here that I drew, and I popped this in and we said, okay, if we're going down to around 666, 667, where the 127 is. You can see right here we plotted that 127 right to the tick. Another thing that we noted is symmetry. There's tons of price symmetry in these markets. I took this line right here. I'm going to paste that right down in here, and you see that 127 really matches up with that 1-to-1 symmetry right around that area. So again, another building of possible reversal. We got down there. You clearly see we held two candles, kind of dojis, bam, rally. Now, where does that rally occur? I'm going to take this leg of the move. I'm going to paste this where that ended right there. And look at that. Notice how the market tends to respect price and time symmetry. It's something that we've noticed. It's always been around. People just don't really take advantage of it. All right? But again, you see we popped down to that 127 right down in here. Bam, bounced off of it. And now we've done basically a 1, 2, 3, 4 measured move right here to these highs. Now we have a double top at resistance. Again, building a case for a pullback. Also, let's go ahead and take a look at the weekly. The weekly is very interesting. You see, this is the last line I drew right here. Ignore this candle right here because this is this coming week's candle. But look at the previous week's candle. That's another building sign of a pullback. The fact that one, we're holding right here, and look at this. It's a hammer close right at the top. Okay, and then another thing is we'll add this. We'll go from this swing high right here, swing down to this swing, and look at that, right at that 618 retracement. Again, another area building that confluence there. Okay, so again, those of you who are in the room or short, we'll be looking to see if this market can continue going to the downside in the coming weeks. We do expect some sort of pullback. It's going to be very interesting to see what happens. Now, what we don't know is, are we going to make new lows? We've been looking at a lot of things lately, suggesting could we be at a bottom? Could we be, could this be the bottom here? It's really difficult to say. We've been looking at a few things. We took a look at GE stock. We're looking to possibly get long GE here. If GE can pull back to around 850, we'll take the long with stomps below the lows here and see if this thing can pop. We've also been looking at a couple other stocks. Let's take a look at, let's see, I think we were looking at the diamonds themselves, which is the Dow. Same sort of thing. You see, respecting that, if we pull down here, could be, again, it would be an aggressive trade, but we may be looking to buy here with stops below here and then looking for the upside target of a retest of this area and then possibly rallying back up. I do think we could see some more pops, but again, these are just bear market rallies. If you take a look here, just using simple trend lines, you see we've just essentially just rallied to that trend line and we're really in this just bear pullback. Everyone seems to get excited every time we get these rallies, and it happens every single time in a bear market. You get these fierce rallies where everyone thinks it's over and it really isn't. So until something changes here, you'll see we're clearly in a downtrend on the Dow, which really translates to all the markets. Until something changes here, until maybe we get a break above these trend lines or something that changes, there's really not going to be, there's no compelling argument to say that this bear market's over. So don't get overexcited. Anyways, to conclude this, really, we're going to go into the week. Let's go back to our 4-hour chart where we got short. So we'll go back to the ES. Let that load real quick. Okay, and let's go back to our 4-hour chart. Format data series. I'm going to go to a minute and type in 240. So there we are on the 4-hour chart. You see we've pulled back, currently trading at 52.75. If we can continue to the downside and break through here, then obviously we're going to expect a retest of the 828s. If we break through that, we're probably going to see those 800s. I think it's a very strong possibility that in the coming weeks we could get to 800 at the minimum. If we break through 800, we're probably going to be seeing somewhere in the 740 to 770 range on the S&P. But again, we'll have to see what happens. Now this week's going to be real big. We got a lot of news coming out. We got FOMC announcement, GDP, all sorts of numbers, earnings, all that stuff. So it's going to be very, very interesting to see how the markets react to that. Okay, so those of you in this trade, stay focused, obey your rules, and then those of you who are not will see any setups that occur. Right now, just hanging on, waiting for some setups to occur. Anyways, aside from that, we will see you at the next video update. Take care, and we'll see you next time.